Welcome back to NYSE TV Live. The retail sector, led by NYSE-listed companies like Home Depot and Lowe's, made headlines earlier this week when reporting their latest quarterly figures. Well, with so much to dissect, Bill Mann, he's a chief investment strategist at Motley Asset Management, joins me now with more. Bill, it's great to have you on the show. It just so happens that many of these discretionary retailers are based here with their stocks listed on the stock exchange. I think of Canada Goose as one example. That stock up 20% in the wake of its results. What are your takeaways?
Some of the takeaways that we've seen are that when we're talking about the tariffs, a lot of people immediately started looking at the retailers. And what we've seen is that the extraordinary retailers, the largest of them, the Costco, the Walmarts, the Amazons, the companies that have differentiation, the ones that have been setting prices, have done very, very well, while you're seeing some real pressure with companies like Target, which are just that step below, trying to figure out where they are. And so you can see a lot more nervousness about the tariffs and the impact they will have than companies that have already been struggling coming into the current earnings season.
How are you finding, Bill, that companies are adjusting in the wake of changes to trade policy?
Most of them, it doesn't seem like they are yet. It seems like, we've seen some that have tried to go to the board, but a lot of companies in the retail space are not price takers. They are the ones who simply have to keep their pricing relative to a lot of the big guys. And I thought that the comments from Walmart this last week were really, really interesting. The way they laid out the fact that they did expect there to be an effect from tariffs, but they were waiting to see exactly how it was that they felt like they were going to be able to benefit. So they weren't really suggesting that they were going to go to price, which is interesting at a 4% gross margin for the business. They were more suggesting that they expected that there would be opportunities that would come up because other companies would either have to raise prices or would have to have their own earnings weakened as a result.
Mm-hmm. Now, how should consumers anticipate that this could impact them based on what we heard from the retailers this week?
Well, I think that we're seeing retailers be very cagey about whether they're going to raise prices or not. One thing that's really interesting that we saw over April was an immediate reduction in shipping coming into the U.S. And so there actually may be a window of time in which impact than pricing, that we go back to almost where we were during the height of the pandemic, where things weren't available. And so there are some opportunistic purchases that maybe people should make, but I wouldn't really worry about that so much in terms of pricing as much as I would in terms of availability for a period of time.
Mm-hmm. Now, I'm curious here if there are specific stocks within the retail sector that you think are standouts, and what more you can tell us about those specific names.
I think some of the ones, we've already talked about Walmart a little bit. Walmart, interestingly enough, trading at a higher multiple than either Amazon or Microsoft. So it is very, very highly valued for a company that has minimal growth. I do think it is still a standout. Other ones, actually, oddly enough, because you would think that the tariffs would really hit them, I think that Lowe's and Home Depot, that duopoly of home improvement, are really poised for some excellent results going forward over the next year.
Bill, I want to ask you about some timely topics, even ones that have been developing this morning. We all know trade policy, as we've been talking about, and tariffs is having an impact here. But this morning, we did see President Trump's agenda make its way through the House. It now advances to the Senate, this budget bill. What is the impact there?
Well, we've seen over this last week in Japan, they had a very, very negative Japanese government bond auction. We had a negative bond auction in the 20-year here yesterday. What we are seeing, I think, is an administration that's trying to get its arms around a deficit issue that is really, really large in scope. It's a little too soon to see. Obviously it's got to get through the Senate as well, although they have a very good chance since the Republicans have a majority in the Senate. But ultimately, some of the fears that we saw going through April were a question about whether the policies of the administration would actually bring down the deficit itself and attack this $37 trillion issue that is actually biting into components of federal spending in terms of the servicing and things of that nature. Unfortunately, when you see rates, when you see bond auctions go poorly, that does push rates the direction that the administration would not want them to go.
Bill, great to get your take, talking all things markets here, including the latest earnings. That's Bill Mann, he's the Chief Investment Strategist at Motley Asset Management.
Thank you.